Hello, and welcome to AMZN Investment. This analysis is for AMZN.com on NASDAQ as of 31st of July 2026, with a share price of $271. The full report is on donation.ca. Do not buy the near horizons. A blowout quarter made the stock too expensive into a tape that just turned against the AI cohort. Hold long term. Let's start with what went right, because plenty did. Amazon just printed its first $200 billion quarter, with revenue up 20% and operating income jumping 43%, profit growing more than twice as fast as sales. The engine is Amazon Web Services. Cloud revenue rose 36.7%, its quickest in 18 quarters, at a 39% operating margin. Its contracted backlog is close to $500 billion, and its artificial intelligence and custom chip lines each now run above $25 billion. Business quality scores 77. This is a company that is getting stronger, not weaker. Here is the catch. The stock gapped 15% on the results, straight to $271, so a better business became a more expensive one. On reported earnings, Amazon looks reasonable, but those earnings are misleading. Of the $62.6 billion in reported net income, about $53 billion is a non-operating markup on equity stakes, not money the business earned. Strip it out, and the stock trades near 41 times clean operating earnings against a warranted multiple of about 27, roughly 1.5 times what we can justify. Free cash flow has been erased by the capital spending build. Fair value sits near $215, and valuation scores just 30. And this is why a hold becomes a do not buy. Amazon chased a 15% gap into resistance around $278, with momentum overbought, a poor entry. More importantly, the macro tape turned. Our 30th of July read shows market breadth narrowing again. The average stock went nowhere while a handful of technology names ripped, and the top 10 are back near 41% of the whole index. That flips the armed artificial intelligence concentration tail from a watch item into a live derating risk. And for an expensive member of exactly that cohort, it fires our do not buy trigger. On top of that, Amazon's consumer side faces a tariff and inflation headwind. So where is the real danger for a buyer here? It is not the company, it is the cohort. If the armed tail fires, an AI private valuation markdown, a hyperscaler capex guide down, or those mark-to-market gains reversing, the whole group's multiple can compress from about 41 times toward the mid-20s, dragging Amazon to roughly $185 regardless of how well it executes. A hot inflation print, the 1st of August tariff wall, and a soft jobs number are the conditions that light that fuse. But be honest about the other side. What would make us wrong is another AWS-led beat and breadth broadening back out. That is the bull path toward $345. Now weigh the risk against the reward. The bull case is roughly 27% above today, the base case the most likely about 7%, and the bear case a fall of about 32%. So you are risking about 32 to make 27. So our call on Amazon.com, on NASDAQ, do not buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by AMZN Investment at donation.ca. The link to the full report is in the notes below. Have a great day.